Steve.
Hey, Bret Starr. How you doing, buddy?
I'm doing great, man. I am looking forward to talking about winning the downturn today.
Winning
the downturn. But in the meantime, I'm back from a strange Thanksgiving trip to New Orleans. Took the whole family to New Orleans. Everyone asks, do you have family there? I'm like, no, we just decided to go to New Orleans for Thanksgiving.
Well, you know, New Orleans is known as a family-friendly destination.
Oh, yeah, it really is. Yeah, New Orleans does get a bad, rap for, because it really is a family-friendly destination. Of course, around the holidays, as always, the food is amazing. But even things like parades and stuff like that, everyone kind of has this vision from the movies that it's all, happening on Bourbon Street and it's debaucherous and all that stuff. But the parades are all family affairs. And one of the most interesting things that I saw was the parents all bring ladders with wheels on them. And they have chairs welded on top of the ladders, and they just put their kids up on the ladders while the parades are happening. And they're just kind of stuck there. They love it. They think they have like a seat of honor, but also they can't go anywhere. So they're just sitting in these ladders.
That's actually pretty brilliant, as long as the ladder doesn't fall down after, one too many hurricanes.
Well, see, that's the thing. They're not really like in the family parades. It's not really like that kind of scene. But anyway, we spent our Thanksgiving at the horse tracks.
Oh, nice. The fairgrounds?
Yeah, the fairgrounds at the Thanksgiving Classic.
Nice.
So it was,
you win any money?
Yeah, I actually hit a trifecta in the 9th race. And
wow.
Did all right. And Jack was betting on horses based on their age. He just said, Daddy, which horse is the oldest horse? Because it's the most experienced. Like, okay. He won like half his bets. So, yeah. Teaching my kids life skills, man. Life skills.
Yeah, that's good. I mean, it's not, I wouldn't expect to know, Jack to understand the nuances of like speed handicapping or anything like that. So
I just told him, bet on the jockey, son. Just bet on the jockey.
You like the name of the horse? Bet on that.
There's some pretty good names.
Yeah.
How was your
It's
Thanksgiving?
like buying a bottle of wine based on the label. Same thing.
Yeah.
Never fails. Except sometimes.
How was your Thanksgiving? Except almost every time.
Yeah. It was good. It was just kind of mellow family time around St. Louis. It rained all day. It was kind of dreary and cold, which made it good to stay inside. And we literally did not make anything. We ordered everything in, so it was literally just sticking it in the oven to heat it up. I won an epic Scrabble game.
Wow.
Got 75 points on Zinc.
Wow, that's a good one.
Made a lot of people angry with that one.
Yeah, I bet you
that
did.
made my holiday.
Well, are we in a downturn?
Well, that's a great question, Brett. I think that if you're looking at the tech industry, just based on the behavior, then I'd say yes. Does that mean that we're actually in a downturn? Not necessarily, but I think people are certainly acting like it.
Yeah, it's so confusing and strange because not all these things are connected in the way that we probably like to think they are in the kind of popular media sense of the word. But we just set a record for Black Friday. Did you see that? Not just online sales, but also brick and mortar sales.
Wow.
And they're expecting to break records for Cyber Monday. So on the one hand, you've got, all these signals that, kind of indicate, the economy's strong and maybe inflation is stalling a little bit, et cetera, et cetera. But, tech has lost like $7 billion in valuation.
Yeah.
And everybody talks about like FTX and the crypto meltdown and all that stuff, and that's pretty bad. But the tech markets are, doing equally as bad in the short run in some areas. Mm-hmm. And there just seems to be like this mix of sentiment around, what is the economy going to do versus what should we do? And I think mostly what I'm seeing is that people are kind of taking a wait and see approach. And then they're on varying points of a spectrum around feeling that the economy is great and fine, and that there's just some weirdness going on. versus people on the other side who think that we are in a significant, persistent downturn that is going to last for a while.
Well, and I think that, it's, if we want to like take that apart a little bit, let's just talk about what's going on in tech. Because I think that there's what's the argument that tech is actually in a downturn? You're seeing, kind of broad layoffs that are disproportionately from the largest tech companies, which, get headlines and I think spook people. The reason for that is they're not posting the same kind of growth numbers. If you look at like the Microsofts, not really the Microsofts as much as the Facebook, Meta, then getting into other socials, the Twitters and all that. It's just you're seeing that sort of anxiety begin to perpetrate the broader tech market, which is really created a sense with investors that this is not a favorable fundraising environment. Therefore, if you are needing to raise cash sometime in the next 24 months, you really need to sit on your cash, be very conservative, and be prepared to kind of ride this thing out, which has led to some preemptive layoffs. It's led to some rollback in spending. But what I think is interesting is that when you start kind of like jumping in and looking at kind of the facts on the ground, we're not seeing the same kind of investment that we saw in 2021, but we're still, I think that the last, 2 months, we've been clocking around $1 billion in global investment into work tech. So, we're probably going to finish this year at right around 20. If the trend line keeps up, next year should be 12 to 15, which would still be, not a bad fundraising environment, especially when you kind of look at the historical average. So I think that the idea that money is not available is at the same time, somewhat true, but also overstated.
Yeah.
And then I think there was an interesting article I saw in TechCrunch about companies that had over the last year gone against the advice of rollback spending in sales and marketing were actually outperforming companies that hadn't been.
Shocking. And why? Yeah, why would that be? Because that's our look. We've been doing this for a while. Right. This is probably our third or fourth, kind of major, economic cycle with some smaller ones in between. And we pretty much say the same thing every time. And we have loads of evidence that what we recommend during times like these is successful. And, the big picture is nobody really knows for certain what the next 3 months, 6 months, 9 months, 12 months, 2 years holds. People tend to over magnify and overgeneralize based on the moment that they're in.
Right.
And that kind of has a chilling effect on their decision making and their willingness to invest in things like marketing, which is near and dear to our hearts. But the reality is, if a majority of the market feels that way, it's a great time to actually invest in marketing and to not just, basically, if you want to put it in financial terms, buy marketing at a discount, right? Because the prices tend to come down. There's a little less pressure on inventory, et cetera, and not just increase your brand recognition against competitors, which we know is correlated to market share, usually about 18 to 24 months out, right? Like if you are number 2 or number 3 in brand recognition, about 18 months out, you're probably going to be number 2 or 3 in market share. In a quote normal tech market. And so, you have all these opportunities to do that at a discount, to build dominant share of voice, not only at a discount, but spending less anyway, because you have less to spend against. Right. So there's kind of a double discount there. Right. But then on top of all that, and probably the most important thing is it's an opportunity for a defining moment, an opportunity to control the narrative. And so if you have the dominant share of voice, which you're getting at a lower cost and against fewer competitors, and you have a story that you want to tell, the odds that that story sets the narrative pace for what's happening in the market is much greater during moments like this, especially if it's delivered with, confidence and delivered in a way that creates a defining moment with buyers, than during moments when everybody is, bullish and spending like crazy and, driving up the cost of marketing and making it a lot harder to establish dominant share of voice. And so there is a way to, quote, win the downturn. And, I think it's pretty straightforward. And that is taking advantage of the opportunity to establish your narrative and to create defining moments against a less competitive field.
I think that is true. I think what is a little different this time is all the money that has come in the market over the past 2 or 3 years means that you're not seeing kind of universally a rollback, primarily like in digital media investment universally. That's true in some categories, not true in others. But typically one of the playbooks was, and I think the case study example was what Cornerstone On Demand did from 2008 to 2011, where they went from, way behind Saba in terms of ARR. And this is all publicly available from, the SEC filings from both those companies when they were both public. Way behind in 2008 to by 2012, they had established parity. And when you look at how both of those companies were investing in sales and marketing and how that they were in market at the time, that really tells the story. Cornerstone really, with far less money than Saba having available, they went very aggressively into market. I think that what's unique about this this downturn that is, I think, less true then is the customer experience angle. Where if you think about the maturity of the SaaS buyer in 2008 to 2010 versus now, buyers are much more sophisticated and they're less likely to put up with the BS, just quite frankly, that SaaS companies would invest on them. It was basically sign the deal, sell the dream, live the nightmare. And a lot of customers did not have good experiences. I think this time around, what you're going to see in market is that there's still, digital media is not, you can't just dump a bunch of money in it and see performance. I think it's much more nuanced than that. But really, I think that a lot of what we're seeing is that growth in 2023 for SaaS companies is going to be expanding share of wallet with existing customers, which means that's straight up customer success and customer experience. And there's a lot of companies that light bulb has already gone on, and we're seeing a lot more of the investment in those type of initiatives now. Yeah.
And to push on that a little bit, people often wonder what the role of brand and marketing and sales are in customer experience, because a lot of people, when they hear customer experience, they think exclusively about product and customer success. And we have a much more holistic view that customer experience is, 5 subdomains that includes brand and marketing and sales and product and customer success. When you take a moment like this in a downturn, what a lot of people do is fall back on what they perceive to be blocking and tackling, right? So they may not, turn down their digital spend, for instance, but they are backing away from larger investments in, say, international ad campaigns that are multi-channel, or maybe they had a celebrity endorsement, contract on their desk and they decided, not to do it. And ironically, these are the things that create defining moments, right? And so you look at like digital spend, for instance, when you take away all of the magical, defining moments in brand marketing and sales, and all you're left with are keyword driven, algorithmic driven digital marketing campaigns, the odds that the messages that are being sent through digital marketing are that they're going to be out of sync with what your actual product experience are much greater, right? Because when you invest significantly in defining moments, you do a lot of work to think about a vision that holistically extends, from brand through marketing and sales to product and to customer success. When you just let digital marketing run, which is what a lot of folks do in times like these, and this is not meant to be diminutive at all about digital marketing or, the folks who do it. But people who do digital marketing want to win, and they want to win based on numbers, and the numbers are cost per clicks. And, if you think about a typical account-based marketing program that you're running in something like Terminus or something like that, you might have 60 or 80 or 100 or 1,000 campaigns running. And all those campaigns will be, kind of divided into the different key phrase that you want to show success against. Mm-hmm. And well, what happens if one of those, kind of key phrase groups is like employee experience, for instance, right, and you have a solution that is like performance management, right? You want to perform well on employee experience, and the digital folks are all very tuned in to winning on that digital format. But the reality is the gap between, in this example, an employee experience position versus a performance management product is so huge that if people come in with the perception that they're buying into a vision that's based on employee experience, and then they, get through the sales process, or they're in the sales process, and what they really see is a rank and spank, traditional performance appraisal, performance management solution, that creates a break in continuity in the customer experience that results in really bad outcomes in sales, but also in customer success. And there's nothing wrong with the product at all. It's just different than the expectation that was set. And so when people kind of go into this reflexive motion because they perceive turbulence in the market, and they fall back on blocking and tackling, the odds that a bad customer experience is generated with a genesis in, kind of the marketing experience and then falls through the sales experience is much greater. I think there's greater risk associated with it.
Well, yeah. And I think the other thing that is already happening in real time is, the numbers aren't changing for sales teams. And it's just like they're feeling more pressure than ever. And it's just like, as we know about salespeople, is it gets to a point where you need to close a deal. You'll say pretty much whatever you need to, whether or not it's on the roadmap or not, whether or not it's realistic, in order to get that deal closed. And it's just like, that's just going to exacerbate the misalignment issues between kind of what happens in the sales process and then what is the actual experience with the product and with the customer success team.
Yeah, it's a classic case of surrogation, right? It's like, and I hear this all the time. Our MQL numbers are great. Digital marketing is doing really great at winning, the key phrase game, right? Across all these like different groups of keywords that they're going after. We've got so many leads, but we have a conversion problem in sales, right? So sales isn't hitting their numbers. And so it's not just that salespeople, because it's their job and they're, driven to hit numbers more than any other group in an organization. They're driven to hit their numbers. They're actively encouraged to do whatever it takes to close the deals because hitting their numbers is the thing. And so often what you'll hear is that executive management thinks that they have a sales issue, like, the salespeople are the problem or whatever, and they're not really the problem. And their response is to micromanage them and to try to convert the raw material of marketing qualified leads into closed deals. And that often leads to, in most cases, I'd like to say an unintentional, kind of manipulation of, hey, this is what you think you're buying is what you're buying. Whatever you need to hear, it's persona-based sales. We need to tell the person that we're talking to, we need to figure out what their persona is, what they care about, and we need to tell them what they want to hear to close the deal. And then a lot of those deals end up closing because of the micromanagement and the pressure to hit numbers, et cetera. And they get thrown over the fence to customer success. And then customer success is stuck with a bunch of customers who thought they bought something other than what they actually bought. And then you have that same executive team go into customer success saying, well, we need to steer people away from the parts of the product that they're dissatisfied with. It's like, well, but that's the part that they bought because of this just relentless pressure, to hit numbers, et cetera. So what do you do in a situation where, you're not hitting your sales numbers?
So that's not a rhetorical question? No.
I mean, it can't be, right? Like we got to pay for our lunch here today. Right? It's like, okay, so we've been talking about this probably, we probably brought this specific point up 15 or 20 times in our conversations, that sales gets caught in the middle between product and brand and marketing. And that they basically, because it's such a numbers driven, apt to fall into surrogation where the numbers become surrogates for strategy situation, that sales will end up in an effort to hit their numbers and drive the business forward. Basically trying to connect the narrative between what's being said in sales and marketing, or in brand and marketing, as close as they can to what the product actually delivers, with just enough room to actually get the deal done. And that's what ends up in the situation that we're talking about, where you end up with unhappy customers. So what should you actually do? And, my response to that is, you have a customer experience problem. And instead of whipping sales, you need to look at where the breaks of continuity are in the chain between brand and marketing and sales and product and customer success. And so if you have what you perceive to be a sales issue, especially in a downturn, or especially in the type of uncertainty that we're in now, if you perceive that you're driving plenty of leads and that your brand is doing great and you've got all the MQLs in the world, but you perceive that you have a sales problem, ask yourself, do you also have a customer success problem? Because generally the sales problem goes hand in hand with the customer success problem, because the product is what it is at any moment. And there's a roadmap and vision and all that stuff. I'll get back to that in a minute, but the product is what it is. If you feel like you've got a good product and you feel like you're performing well in brand and marketing, but sales isn't hitting their numbers and customer success is not doing as great as you want, to put it mildly, don't go whip everyone's ass in sales, and don't go, try to create a strategy in customer success to continue to reload because people are burning out so quickly because they're constantly in triage mode. Rather, ask yourself, what are all of the connected moments in brand, marketing, sales, product, and customer success? And where are the breaks in continuity that are creating these problems that right now are manifesting in sales and customer success? But the reality is probably all of this is driven by the lack of a clear, holistic customer experience vision that causes everyone to row in the same direction in brand, marketing, sales. I mean, just in that, example we're talking about with digital marketing, if brand, marketing, sales, product, and customer success all were driven by the same customer experience vision, you wouldn't have people in digital who wanted to win the game in this one little chunk of, keywords over here that actually was out of sync with what the product actually does, because it'd be off vision. Right. And so we have all these, notions of a sales-led company or a marketing-led company. And then there's this big, innovation, which is the same, innovation that was 10 years ago. And then 10 years ago, it's all cyclical, the product-led company, right? So it's like the innovation is, no, we need to be sales and marketing led. And then it goes back over to product led and then back over to sales and marketing led. No, it shouldn't be led by any one group. It should be led by the vision of the organization, the customer experience vision. And that should pull everyone in the same direction towards execution. That would solve these breaks in continuity. So don't go and, whip, all the salespeople's ass all the time. There's probably something else going on.
Well, and I think that, in terms of like sales hitting their numbers, I mean, one of the things that, what's the Japanese saying is that when the water in the the river goes down, that's where you see the rocks. I think
Taichiona.
So the rocks that we're seeing right now are this attachment to kind of that connect, convert mindset of where are my demo ready leads.
Yeah.
And then all of a sudden when it's just like, oh, these aren't demo ready leads, what do you do with them? It's just like you can go kind of chasing after, the basically bad business and maybe convert some of it. Or you can say, okay, look, they're not ready to buy now. Sales cycles are slowing down. What can we do to deliver engagement so that when they are ready to buy, we sell them the thing that they need to buy? And, then it's just like, that's where getting that customer experience of looking at your best customers, how do you they know you, they like you. How do you go ahead and sell them something else?
That's right.
How do you expand that market share?
Yeah, that's right. That's exactly right. Yeah. So like if you're vision driven instead of, like, I hate to say it, but numbers driven, because numbers are supposed to be based on the vision and the plan and the strategy. But we talk about surrogation all the time, and surrogation is what happens when you started with a vision, you started with a strategy, and then you got some numbers put together to figure out if you were making progress against that. But then you forgot what the vision and strategy was, and now you're just trying to hit the numbers. And in hitting the numbers, you may make decisions that actually go against the original vision and strategy. That's surrogation, where the numbers become surrogates for vision and strategy. Sometimes, so going back to the first point of like, hey, you don't, just focus myopically on sales or customer success or marketing or wherever you think the problem is. Think holistically about the continuity of your customer experience. That's number one. Number two is sometimes you just have to take it on the chin. Sometimes people are not ready to buy and sales are going to go down. And you have to put that in the context of your customer experience vision. And in sales, sometimes that means that your vision will lead you to try to help people in a different way that doesn't result in closing a deal that day. We saw this during the pandemic. I mean, big time, right? Nobody wanted to pick up the phone and start calling, and nobody should have, and start trying to force people into buying stuff when, a lot of people thought the world was falling apart.
Right.
And so you saw some really great companies who said, this is not our moment to go out and push the numbers. This is our moment to go out and try to help people based on whatever our unique vision is. You saw people creating free software. You saw people just, having conversations, trying to connect them with other resources and network. And then when we got past that initial, kind of a freak out moment of the pandemic, those were the organizations that did really well. Meanwhile, you had a whole bunch of other organizations that, brand and marketing was saying, oh, we care about you. We're here. We're all together, et cetera, et cetera. But then someone, forgot to tell sales to turn off their sequences and templates and their automated outreaches that were like, buy now, demo, buy now, buy now. And they didn't do too well. And it took them a while to bounce back. And so here's another one of those moments. If you go through step one of looking at, looking for breaks in continuity in your holistic CX, and you don't really perceive that is the issue. Step two might actually, instead of pulling back on investment, pulling back on what your expectations are for performance in certain areas and asking yourself, instead of trying to hit these numbers over here, close deals, et cetera, et cetera. And this is going to sound so crazy to so many people out there. And it's just fucking basic. It is absolutely fucking basic. And I'm getting upset even fucking talking about it. It drives me nuts because I can, just hear it already. I can see it in the comments. It's like, oh, you don't know anything about running a business. You always have to hit your number. Fuck you. Every now and then, if you want to run a sustainable business that builds value for shareholders and customers and employees and does something good in the world, you have to take it on the chin a little bit and just, breathe and not shove software down people's throats. Sorry.
Well, I think in the data from our Work Tech Outlook survey, where we got over 700 respondents, showed very clearly it's just like year over year differences from last year to this year were stark. It's just like flat or, slower growth was the order of the day.
Yeah.
And the kind of hyper growth that a lot of these venture-backed companies are looking for is just not happening right now.
No, I mean, I just took a deep dive into the well-being, sector, and I mean, no one's up really in well-being. It's you're lucky if you're 3% down, 5% down, and well-being was one of the breakouts, obviously, and should have been during the early parts of the pandemic. But that's a great example of like, don't force it in that particular situation, because a lot of these organizations, like right now. Because a lot of these organizations have so much brand credibility and stored up brand equity from, how they performed during the pandemic, that to go into freak out panic mode and start, shoving software down people's throats, actually can erode a lot of the, great progress that was made by these organizations during 2020 and 2021.
Well, I think that, in terms of like, looking at some silver linings that are going on right now, I think that what we're seeing in work tech is getting caught up with what's happening in the broader tech market. And I believe that, without a question, sales cycles are extending, deals aren't getting done, but I believe that work tech is going to move through that uncertainty a lot faster than other sectors of tech, simply because unemployment is still near historic lows, retention is a problem, all of the problems that drove the meteoric growth in 2021 haven't gone away.
And if you look at these, what many perceive to be massive layoffs in the tech sector, that's not gonna solve the labor shortage. It's a drop in the bucket. Right. Anyway, in closing, I don't know. What are your thoughts in closing? I got mad. So now I'm still mad. I'm trying to unmad myself.
Just a couple of things. Number one, let's, even start looking at, kind of the front end, like in demand gen marketing. It's just like, I'm talking to companies that are, have been traditionally pretty good at marketing. They're seeing their numbers completely fall off. All their KPIs are headed in the wrong direction. When I talk to, JJ Lapata on our team, who runs, demand gen for all of our digital media, what's interesting is when you go kind of sector by sector, he's just like, wow, that's what they're seeing, because that's not been, our experience. And so there are, even within a specific sector, results are not universally uniform. You're going to see variation, and so even if you are dependent on kind of those, driving those front end leads, there's probably optimizations that you can do right now that you can do things better. At a time when we talk to a lot of companies that are cutting back on their demand gen spend, we have a lot of clients that are actually increasing their demand gen spend. Yeah. So it's just like, there is a way to kind of crack that nut. If you're getting into kind of like the mid-funnel part and looking at what's going on in sales and marketing, it's just like, if you are a turn and burn, connect and convert shop, you're going to have a much different experience than a shop that takes a, connect, engage, convert, and expand motion, which we typically recommend. It's just like, if you're looking at that more holistic kind of motion, it really does have to start from your sales philosophy. It's just like, if you're getting, if your salespeople come back, if these leads suck, they're not ready to buy, and it's just like, we're not going to follow up on them when they're not going into a nurture cadence. We're not going to, figure out how we can warm these leads up. It's just like, well, yeah, it's just like, you're going to, that's just a vicious, spiral to the bottom. And then kind of getting in on the product and the customer success side, look at what is your roadmap delivering that that customers want? Do you need to reshuffle your priorities? And from a customer success standpoint, what are your best customers telling you? What is the experience that they're having? What do they want more of? What are you doing right? And then your worst customers, why are you churning? Why are you churning those? It's just like, you're doing some churn analysis here, correlating that with win-loss. I think that looking at this holistically, number one, is the thing that we're seeing is the number one thing to do, create that consistent vision. But number two, it's just like, even within the experience that you're having, what can you control and what can you go out to do to fix that right now?
Yeah. And I would just, I'd finally say there are moments when the entire market dynamic changes. There are moments when the field dynamic changes. And, I'm not going to do my 20-minute diatribe on, the social sciences interpretation of field dynamics. But we operate in a field, right? And so when we hear the word field, we often think about that in the business context, but there's a whole, there's 60 years of social theory around field dynamics and the participants in the field. And leaders in a field want to keep everything the same because that preserves their leadership. But there are times when the entire field turns over, and when new leaders emerge. And those moments are always moments like this. It was a moment like this when the bubble burst that led to companies like Salesforce.com becoming a leader. There were moments like the global financial crisis that led to companies like Cornerstone On Demand becoming a leader as the whole field reorganized itself around a new organizing principle. We've been at the front end of a new organizing principle since the pandemic hit for us in March of 2020, and we're just now getting to the moment of disruption. And so this is not the time to go quiet. This is the time when the field is going to be completely reordered, and organizations who boldly put their narrative out in the world and believe in something and hew to that vision, these are the moments that create great companies. These are the times. And so, it's like, come on. Yeah. What do you want to be when you grow up? Yeah. All right, Steve. That was good talking to you.
Good conversation. And let's do it again next week.
Let's do it again next week. Hasta la vista.
Hasta la vista.